These 5G stocks are undervalued. These stocks are strong options. Jabil, set to deliver strong adjusted free cash flow and continue share repurchases. Ericsson, executing cost-cutting strategies and poised for growth despite recent challenges. Corning offers cheap shares and expected strong earnings growth, crucial for 5G rollout. Let's dive in. Here are the 3 hidden gem 5G stocks ready to ride a massive market wave. Welcome to Timely Investment Research. Some hidden gem 5G stocks are currently being overlooked by investors and are primed to surge in value this year. These stocks belong to companies that are either directly involved in developing and deploying 5G technology or are set to benefit significantly from its widespread adoption. This includes major telecom operators, equipment manufacturers, and smaller firms specializing in critical components like semiconductors, antennas, and network solutions. As the broader indices like the S&P 500 and the Nasdaq continue to move higher, the valuations of these companies will follow suit, making them formidable investments. Here are 3 hidden gem 5G stocks for investors to consider. Number 1. Jabil. Jabil is a manufacturing services company that operates in various segments, including electronics manufacturing services and diversified manufacturing services. I think now is the right time to buy Jabil stock despite a softening outlook released by management. The company anticipates first quarter fiscal 2024 revenue to be between $8.3 billion and $8.4 billion, slightly below its prior range. The core earnings per share for the quarter are expected to hit near the midpoint of the previously provided range. The revenue forecast for second quarter is set between $7.0 billion and $7.6 billion. But there are some positives to this adjustment. The company expects to deliver more than $1 billion in adjusted free cash flow for the year and will continue to roll out its share repurchase program. Analysts also remain bullish on Jabil's prospects, forecasting an 18.25% increase in its earnings per share and a 4.21% increase in its top-line revenue. Jabil's stock price is up 66.5% over the past year, and I believe its momentum is strong enough to carry it through despite its short-term headwinds. Number 2. Ericsson. Ericsson is a global leader in telecommunications services and equipment and supplies crucial infrastructure to the 5G industry. While inflation remains high worldwide, Ericsson stock has faced some headwinds, but it is executing a strategy to cut back on costs and grow its enterprise and mobile segments. The company's third quarter results align with this direction, showing an earnings before interest, taxes, and amortization margin of 7.3% and efforts to reduce sensitivity to market mix and volume changes. It should be noted that investing in Ericsson is a contrarian one, as it suffers from a 23% year-over-year decline in network sales in fourth quarter 2023. By some accounts, analysts would expect this to be a negative sign, but I'm of the opposing view. When companies have excessive costs, as in the case of Ericsson, with a modest operating margin of 9.87%, this can prompt internal changes. This could include layoffs, which lead to a sleeker and more refined business model, and companies that lay off staff often outperform in subsequent quarters. Ericsson has negative accounting profits, but its price-to-sales ratio is just 0.71, which indicates that it's significantly undervalued with respect to the efforts it has made so far to increase its margins. Number 3. Corning. Corning's optical communications segment, which manufactures fiber optic cables and related equipment, is crucial for the rollout of 5G networks. I feel that now is a good time to invest in Corning stock if investors want to pick up cheap shares in the company. For the first quarter of 2024, Corning anticipates core sales to be approximately $3.1 billion, with core earnings per share expected to range from 32 cents to 38 cents. This projection positions the first quarter as potentially the lowest of the year. The company is also expected to see strong earnings growth of around 17% year-over-year in 2024. Like the other hidden gem 5G stocks on this list, Corning appears undervalued, as it trades at just 2.17 times sales, and Wall Street rates it as a buy. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.